All right, so we're back. Matt Decker, Cash Value Life Insurance Reviews and Leverage Wealth Management, my business partner whom you met last time. If you haven't seen part one of this kind of interview, you should check that out first because it kind of lays the groundwork or the foundation, as it were. But Aaron Vincent, my business partner and best friend who runs Vincent Planning.
That's me.
Check us out at vincentplanning.com. But I'd like to pick up our discussion here. We left off last time just kind of talking about our backgrounds and how we got into this.
Yeah, how we got here.
Yeah, exactly. And I'd love to tell people our unique experience in the wholesaling world.
Yes.
Which I think is probably something that most people haven't had much experience with. Most people don't understand, number one, this industry and how it's structured. And the different types of advisor that there might be. But I know for certain, no one understands the wholesale reality, which is where we both met and where we really kind of got an opportunity to not only advance our careers and learn a bunch of stuff, but have about every situation possible thrown at us.
We got a peek behind the curtain to see how the world of that industry works. Yeah, interesting.
Yeah. I'd be interested, and I don't know that I've really ever asked you this before, but well, first let's just explain what a wholesale situation is. And I may actually write this down here. So because it's so nuanced, it might be good for me to just kind of give a representation. So in the financial services space, you've got all kinds of different types of advisors, right? You have what would be known as like a captive advisor, and you've got independent advisors, and really maybe several things in between. So when I started at that property and casualty firm that I mentioned, I was a captive agent, and what that essentially means is I was a W-2 employee, right? And so I wasn't Matt Decker Insurance Agency. I was, Matt Decker working on behalf of big name insurance company. Employee of. They signed all my checks. I had to write only their products.
Right.
But the bigger thing is they sent me away on 2 different occasions for 2 and 3 weeks at a time to get trained. They'd fly me to the home office. They'd put me up in a hotel. I'd spend 2 or 3 weeks going through every product that they offered and understanding the ins and outs and how it worked and where it fit, where it didn't fit. And it was really good kind of foundational level training.
And drinking the Kool-Aid, right?
And drinking the Kool-Aid, that's right. But explain for everybody how the independent model is different. And then maybe I'll come in on the back end and tell people where we fit into that.
Yeah. I want to be careful and not paint one as right and one wrong, even though I definitely have an opinion on that. Because I think there are different services offered and different things for either way. But generally speaking, on the independent side of things, well, first let me say, with what you just described, not only are you sort of, you have to answer to your managers and their bosses and their expectations and their goals and things like that, but you're also essentially selling or providing their products.
Sales quotas,
which also means typically, if it's a publicly owned company, and most of them are, it typically means that you've also got shareholders in place who want profit. They want a dividend. They want a return. So there's that pressure and sort of that reality that infiltrates everything you do, whether you realize it or not, even the training that you get. But you also get, as you mentioned, great training. You got a lot of tools. You've even got, people and support and all of the benefits that come with a bigger organization. You've got that as well, especially for a younger learning person. That can be very helpful.
Might be helpful also to just mention, throw out some names. So captive companies would be like Mass Mutual is, typically going to be a captive company. State Farm, captive company. Allstate, I think, is still a captive company. Man, who are some of the other big ones out there?
Yeah.
Lincoln can be captive.
Right. New York
National
Life, and Mass
New York
Mutual
Life. All of those, for the most part, captive organization.
Northwestern
Mutual. I think New York Life still does have a captive arm, but those would be your captive organizations where you're, or any of the banks, right? If you're working for a bank, you're captive. You're selling their products.
They mentioned a lot of the insurance ones. On the investment side, we'll call it, you've got the Edward Joneses and all the banks, the Bank of Americas and the Merrill Lynches and the Wells Fargos and the Raymond James. They've got a similar model where you may be a financial advisor or an insurance salesperson, but you are under their umbrella. You're selling their products. A lot of times they have agreements with the mutual fund companies, for example, and so it's sort
they
of
get to decide what you do and don't do.
That's right. They've got some influence on that. Then you go to the independent side of things, where there is no home office, there is no big umbrella company to either dictate, what you provide, what you talk about, even the training, or to sort of pressure you or put quotas on what you're to sell, what you're to talk about and provide to your clients. So you got the world's your oyster. There are no expectations as far as which funds to provide or what to talk about. But on the other side, you also don't have the back office support, some of the tools and technology possibly, at least not provided for you. Your office is not provided for you. You're not given a computer and an assistant.
Yep.
You're not given leads of potential clients to call. None of that. So you kind of forgo all of those things with the hopes of building your own in order to, at least in our case, I might be jumping ahead here, but in order to provide a service that's completely with the client's best interest in mind.
Yeah.
It's not,
you're free to do what you want.
You're free to do what you want, free to do what's best for your client without pressures to answer to some shareholder somewhere.
Yep. And so where that kind of dovetails into our conversation is in the independent world, there's a thing called wholesalers. And a wholesaler is essentially the middleman or the go-between between an independent agent or an independent advisor and all of the big name firms that you guys have all heard about. The big name firms, Fidelity, they don't want a relationship with an individual advisor because they're too big for that. They want the advisor to work through a conduit. Yep. John Hancock doesn't want to field my phone calls. They want to field a phone call from somebody who's working with 10,000 independent reps because they don't have in a region. They don't have the bandwidth. They don't have the scale to provide those services. And so we worked at a wholesaling firm where we were basically the ones responsible for the training. We were responsible for product recommendations, plan recommendations, and we were doing that for independent advisors basically across the whole country.
Yeah, we represented 15 or 20 insurance or investment companies, and advisors would call us and say, "Hey, I've got this client in this situation, and I need some advice from you, the wholesaler, on what product should I use? How do I communicate those things to my client?" And all that kind of stuff.
Yeah. So you can tell that both Aaron and I, we're not, you can tell from, we both look pretty young, I think.
Yeah. You're quite a bit younger than me.
I'm not that much younger, but but you can tell that we're not, 60, right? Yes. Most people in our industry, it feels like, are, pushing retirement age at this point.
Yep.
We're quite a bit younger than that. And I get all the time, because I talk to a ton of people through the YouTube channel and through kind of our interactions there. And I get all the time, "Matt, you look so young. How do you know all of this stuff?" And actually, I tell people, if you book a call with me, you can literally ask me any question you want to ask about, whatever it is that we're talking about. Yep. And my guarantee is I promise I will have an answer for you. And I don't think I've been stumped yet. I know that's a big promise, but I haven't been stumped yet. And the reason I haven't been stumped is because of that wholesaling job. How many agents across the country would you say we were each kind of working with?
Wow, I would say, so we did that for 6-7 years probably in that role. I got to believe it was at least a couple hundred a year, if not more.
I would say.
So, easily 1,500, 2,000 maybe.
Yeah. And probably
each of them has a couple hundred clients.
Right. Yeah. So we were helping with the planning and the administering of plans and recommendations for, let's call it on the safe side. Let's say 100 independent agents per year, and the majority of their clients. So the majority of the clients for 100 independent agents across the country, for each of us, we had a different, we worked with a different 100 or 200. And throughout that process, it's pretty fascinating what you actually get to work on.
And the only common thread between all of them was they were independent.
Correct.
So who their clients were and what their demographic was and what their background was, what their experience was, changed, just as much as their clients did.
I know you've done some plans for CEOs of companies that everyone watching this video would be able to recognize.
The names, probably.
Yeah,
some professional athletes, and even some politicians. And Yep.
I had a couple politicians. I've done work for people in the NBA, in the NFL. I think you've done a major league ball player or two.
Yep.
You've done some musicians.
Yeah. Those are always interesting.
Yeah. And what's awesome about that is that would not have been possible. I mean, I think at the time I was 25
I was
when we
maybe
started.
30. Yeah.
So let's just take a step back for a second. So I'm a 25-year-old kid who's just moved to Atlanta in this wholesaling role, and I'm working with 100 advisors across the country that are all probably, average age probably 55, let's just say. I have no idea what I'm doing at 25 in this role, and I'm responsible for the planning recommendations for some high-profile people.
Say it like that. How did that happen?
Well, what's scary, that people don't understand that, that's what happens.
Yeah.
And that's how I think you and I both kind of got our 10,000 hours, or, we got thousands upon thousands of reps that a 25-year-old would never have trying to do things on their own.
Yeah, absolutely.
And that's a huge boost, I think, to our success.
Yeah, I would agree.
Yeah,
I would agree.
So that's where we met. And I would say for the first year or two in that role, there was a lot of learning. There was a lot of ups and downs. Got to work on some really fun projects and do some high-profile cases.
Yeah. Got some good training. Got some good licenses. I did.
Definitely some good training. After a few years, I was basically doing the training for the majority. I mean, they were flying me around to do training, local trainings for independent advisors. And I was 26 at the time, maybe, when I was doing that. And so that was a great experience. But I think both of us started to maybe get a little bit jaded, or I don't know if that's the right word, but we definitely noticed some things.
The newness wore off. The experience and the training and the experience that you get being someone new from 0 to 60. That wore off after a couple of years, and you begin to see and have enough experiences. You travel around, you meet people, and you begin to see that the world is much bigger than what you've experienced. And there are other things out there, other ways to look at it. And I think that began to open our eyes a little bit. Whereas some folks we work with, we could name names, we won't, just kind of happy to stay in that role, happy not to know anything beyond that. I think you and I kind of got to the point where it was like, no, there's more and there's better.
Put your head down, work hard, make a good living, and don't worry about, I'll say collateral damage, but maybe that's a little bit too drastic. But definitely put your head down and just start working. So what was the moment when you started to maybe realize something's not quite right? Or
I know exactly what it was.
Okay, tell me.
I had some suspicions leading up to this, but there was one high profile case we were working on for a client, and I actually flew out west to sit down with the advisor who we were serving and their client. And something about being face to face in the room with the advisor, the client, and talking in specific about their situation. I began to, it's like my experience in training there, and also my growing life experience. At this point, I had at least one, if not two children. My grandparents were now retired, and I had some more experience in life, and began to notice that there were realities in which the advisor could completely manipulate. That may be a negative word, but that's just the reality. Could manipulate the numbers, the message, the results of the planning to sort of skew it in their best interest. And I knew that possibility was there. I knew that could happen.
Doesn't everybody kind of know that on some level? I mean, isn't that the reason that you didn't want to get into this industry in the first place? Because you had some kind of sinking suspicion that this might not be 100% on the up and up.
I'll put it this way. Yeah, that's a good way to put it. I knew it was possible. I didn't know how or where or what it would look like or just the details or the result until I saw it in the room that day. And I could just see it happen before my eyes. The plan that we talked about, me and the advisor prior to this meeting, for weeks and weeks leading up to this meeting, and what was presented to the client were not the same thing at all.
Yeah.
And that's when sort of everything aligned, and I realized, what's changed isn't that a new, better product or a new, better plan or some detail.
Or the client's goals.
Or the client's goals.
Yeah.
No. What changed was the advisor found a way to manipulate the numbers to make it to where they would make more off of this plan being provided.
More money.
Yeah. They would make more of a commission, more of a fee on this plan. And right then and there, it all kind of aligned with, okay, this is the stigma that I was afraid of 10 years prior. Here it is. This is it in plain sight.
Right in front of you.
Right in front of me. Yeah. And I came home from that trip and I talked to my wife and I come home and I say, I can't do this anymore. I literally I can't sleep at night. My conscience is, I cannot do this. and she kind of says, well, I mean, all this training, all this work you've done to get these licenses.
You were making good money at the time.
Yeah. Great lifestyle at that point. We were really excited about that. Saw a future, in the industry now where in the years past, I would say, no, I don't want anything to do with it. All of a sudden now I'm like, I can't do this. And so she says to me, all of that work, all that effort, all that, I mean, would you consider just starting your own firm? And at that point I had no thoughts of that. I just thought I had to do something different.
So she planted the seed.
She planted the seed.
Awesome.
She did.
What's interesting, and we should maybe spend a little bit of time on this, I think both of our wives, Jessica and Kate, have been incredibly instrumental in making this thing happen because around the same time I started to have my own kind of revelations and I knew that this was a possibility only because I'd kind of seen it in my prior job. When I was doing the property and casualty insurance, I kind of saw some things that I was like, I don't really, I wouldn't choose to work with that person because I see kind of how they run their business. But as I was having some of those similar kind of thoughts and similar feelings about things, Kate basically said the same thing to me. She's like, well, why don't you just leave? Like, you'll be fine. You'll be able to make it. Just go. And I think that that's so unique. Both of our wives.
So clear to them.
So clear to them.
Yeah. You can't see it when you're in the middle of it yourself.
No.
It takes someone else from the outside to sort of wake you up to it.
And just the belief that they each had in both of us.
Absolutely.
Instrumental in really making this thing. But that's cart before the horse. But as you were talking about Jessica, it just made me think like, wow, we owe a lot to our wives.
Absolutely.
I guess I'll spend a little bit of time just talking about when it occurred to me that things were maybe not so much on the up and up. We talked about all this training that we were doing. And I'll never forget, there's a right and a wrong way. And if you've watched the YouTube channel, I talk about this all the time. So there's a right and a wrong way to design some of these life insurance policies. And we were trained to do it the wrong way. I don't know another way to say it.
No, that's exactly right.
I mean, we were trained to do it the wrong way.
Yep.
And the reason, I guess I'll go back to the whiteboard here because you have to understand the relationship. Okay, so in the independent model, you have the independent agent. Oh, this is going to be so ugly. I'm so sorry, guys. We'll say this. This is the agent, my little stick figure there. So you have the agent, and then we'll say that this is like the home office or insurance company maybe. So you have the big independent insurance company on one side, you have the independent agent on the other side, and then kind of in the middle, I'm going to draw like a ghost, right? Like one of those Pac-Man ghosts. Yeah, the Pac-Man ghost. Do they have a mouth? I don't know. You have the wholesaler, but we'll call it an IMO because that's kind of how it's known in the industry. Independent marketing organization, also known as a wholesaler. The reason I drew a ghost, I'll let you see what I'm doing here so you can see how bad it is. The reason I drew a ghost is because the agent knows that the ghost exists. The home office knows that the ghost exists. But the client, no idea that the ghosts exist. Unless, like you mentioned, you fly out and help the agent close the deal. But then the agent kind of has to explain, or the financial advisor kind of has to explain who you are, right? Yeah. And a lot of times they would say, Aaron's part of my back office, or Matt's part of my back office. Well, kind of true, kind of not true. Really we work for a third party. Here's why I'm drawing this out. Here's why it matters. The independent marketing organization is not a fiduciary.
No.
In any sense of the word.
Providing a product, that's all they're doing.
They are providing a product. They're training and educating the agent on how to sell the product.
And why they should sell their product over the other insurance companies.
Right.
Exactly.
But the marketing organization or the wholesaler they are not beholden to the client. the end user. Their client is the agent.
Right. The advisor that's providing it. That's right.
And so the reason I say we were trained wrong is because the more money the agent makes, the more money the IMO makes. And so the interests were not aligned. And this just kind of hit me right between the eyes one day. I was tinkering around with kind of the illustration software for a case I was working on, and the numbers just weren't working, right? We knew that we needed a certain kind of growth in the policy in order for it to really work over the long run. And the way that I was trained to do it wasn't working. And so I started tinkering around, and I realized like, oh man, if we just like change the way that we kind of design this product, we can almost double the cash. And so I sent it out. Client liked it, wrote the case. Like that case got funded. Client loved it. And then our manager came over and was like, Matt, what is this? I'm like, what do you mean, what is this? He's like, well, why did you design the policy this way? And I was like, what do you mean? He's like, well, the commission was half what it should have been. And I'm like, well, yeah, but
this is the right way to do it.
It's the right way to do it. What do you mean?
For the client.
What do you mean? I mean, the client needed, and he's like, you can't be doing that. If you do that on every case, you won't hit your yearly nut this year.
Right.
And I just remember sitting there in my little gray, washed out cubicle, thinking to myself, oh no. Because I, like you, I was making good money at the time. And I just had this feeling like, did I just get chastised for doing the obviously right thing? And I went home and I'm like, yeah, that's what just happened. And luckily I found kind of my future mentor, a guy named John Solomon, who basically taught me how to do things the right way.
Right. And then to your point earlier, there was no checks and balances on that.
None.
There was no one to say, was this done correctly for the client? Not a fiduciary organization, as you mentioned earlier.
That's right.
Just a sad reality.
And so I know that most of this is probably going to be a total, maybe not shock is the right word, because you probably don't sit around thinking about the financial services industry like we might, but I assume that it's at least eye-opening, right? Yeah. If you're working with an independent agent, that's probably a good thing, because they're free, they're unshackled, they're unburdened, they can work with any company they want to work with, but a lot of them rely on their wholesaler, their back office, to give them advice, because it's hard being an independent agent, right? I mean, I was a captive agent when I started. I got shipped off for a month at a time for training. Well, 2 to 3 weeks, but several times. I probably had a month and a half total of 9 to 5 sitting in a classroom learning after I had a degree in finance and insurance. So I mean, I was learned up. Okay. That doesn't exist in the independent space. And so you can't fault a lot of independent agents for a lot of them. You can't fault a lot of them. Some of them you can fault, but a lot of them are just relying on the information that they're given. And when the information given is not in the client's best interest because those interests aren't aligned, oh man, you have an opportunity for, well, let's just say it's no wonder that in general, there's an uneasy feeling about certain people in the financial services industry.
And this may be shocking to some, but I think the reason why the YouTube channel is such a benefit for so many folks is because they've got a gut feeling. You know, a lot of them that you talk to, they get pitched this product for an independent agent, as we discussed, and they've got this weird feeling, sinking feeling, and it doesn't feel right. What do? They go to Google, look it up, and find you and your resources. And so it probably is shocking, the details here, but the reality is not shocking at all. I think at one point or another, we all felt
we all kind of know. Yeah. You know what you're getting. And when you're in a situation and you're being sold something hard, we all kind of know. You know, it doesn't feel good to be sold something.
Suspicious.
Right? Yeah, exactly. I think that pretty well sums up a lot of our experience at the wholesaling firm that we were both at. And I'd like to kind of end that discussion. And next time when we come back, I'd like to kind of, we'll wet your whistle. I'd like to kind of give people, when we come back, an overview of the types of advisors that we met while we were there at the wholesaling firm. So until next time, take care, guys.